Great. Good evening, students. Welcome to the live coaching classes organized by Board of Studies and ICAI. This evening, we are going to have our further discussion on this topic called Demand and Recovery under GST laws. As a protocol, I would like to have a confirmation from some of you. Are you able to listen to me, and is my presentation visible to all of you? So I'll just wait for a couple of minutes for have a confirmation, and then I'll proceed with my today's discussion. And meanwhile, I'll just take a few questions which are available in the chat window, and then we will continue with our today's discussion. Namita, in the last class, you have asked one question. Section 65 example explanation offered 20th March 2021 is not covered in the records. This question is not little clear, Namita. You have to elaborate your question. What I understand is, let me just come to my Excel file. Let me just give me a minute. In yesterday's class, we had discussed on information to be provided under section 65. Yeah. So if you recollect this example, Namita, the last information which has been provided to the audit party is on 20th March 2021. So from this day, my time limit of 3 months will be calculated. Accordingly, 20th June 2021 will be the due date for consideration. Hope this particular point is clear, Namita. Further, today there is a couple of other questions which is asked. Namita is asking this question. Sir, Rule 96 not allows refund to the beneficiary of deemed exports, EPCG, merchant export. Rule 96 is restricting export with payment of IGST. I repeat my point, Namita. If you happen to visit Rule 96, what does Rule 96 say? Rule 96 says that, look, you can claim a refund, export without payment of IGST. I repeat my point. You can claim a refund for export without payment of IGST. With payment of IGST, you are barred from under Rule 96 if you have received inputs on account of deemed exports, on account of merchant exports. Now, in this particular deemed exports, Namita, capital goods, EPCG alone has been kept aside. Simple reason, anyway, we are not claiming input tax credit, ITC, in relation to capital goods. They have excluded EPCG alone. So that means any supplies on account of advance authorization, procurement by a EOU, merchant exports. For these three categories, Namita, I cannot export with payment of IGST. This is one point you need to understand. Further, there is one more question. Piyush Jain is arrested, so he's committed any offense under section 132. Who is this Piyush Jain? You have to give me a little backdrop so that I can understand this particular point. And further, Namita says in Rule 89, sub-rule 1, Provisional, they have given a permission to a recipient for claiming a refund under deemed export. Keep in mind that, Namita, refund in relation to deemed exports can be claimed by either supplier or can be claimed by the recipient. So in this particular example, what you have paid, only that you can claim. You cannot claim more than what you have paid. That's the reason if you see, Namita, sub-rule 4A, sub-rule 4B has been carved out in relation to this particular mechanism. In case of confiscation of perishable goods, see, there is a material evidence on hand that the goods have been taken into possession without accountability. goods have been supplied without a tax invoice, procurement of goods are there without authority of law. When any of these three matters have been established, Navita, those goods are liable for confiscation. So the person in charge, the particular person who comes forward and who pays the tax and penalty under section 130, goods will be released. If the goods are perishable in nature and the concerned person does not come forward, then the officer takes the possession of those goods for the purpose of disposal. So this is one point we need to understand. Now let's come back to today's discussion. Demand and recovery. Now, as usual, I'll take you through a few examples under this particular topic called demand and recovery under GST law. Issuance of a notice for raising a demand. How does the process of recovery of tax happens under GST law? That is issuance of a show cause notice. General provisions in the process of this audit, recovery, etc. What are the steps needs to be followed by the officers concerned? Tax collected but not paid. This is one provision where we will understand assessee who has collected tax but not paid to the government, what is the exposure he has got with respect to the penal provisions under GST law. Tax wrongfully collected and paid. Section 77, where when we have discussed the different provisions, we have discussed at length how I can pay the proper tax and claim a refund of that. Recovery proceedings, section 81, 82, 83, which deals with how money will be recovered. That also we'll discuss at length. Finally, provisional attachment and validation of certain proceedings. Now, this is the total coverage for today's topic for discussion. I'll just come to my Excel file to set a backdrop for us to understand from today's topic called demand and recovery. All along, we have understood that what is assessment. Hope you're able to see my Excel file, students. Please let me know. Oh, great. Yeah. We have understood something called assessment. We have also understood something called summary assessment. Assessment of non-filers or unregistered persons. Now, in yesterday's class, we have also discussed on something called audit, special audit. Now, please keep in mind, all along, whatever we have understood is just a mechanism where quantification of taxes payable but not paid. Now, the tax officer concerned, the particular GST proper officer concerned, he does his audit mechanism. In the process of this audit mechanism, he quantifies that, look, you have been registered under GST, you have to pay a tax, you have not paid that particular tax. In the process of this mechanism, he quantifies this particular tax. Now, there should be a power. There should be a power for what? Recovery of taxes payable but not paid. Now, please remember, there is something called Article 14, which deals with your fundamental rights. There should be a principles of natural justice to be upheld. Now, it cannot so happen that for a moment, if we assume that Akshay happens to be a tax officer and Naveen happens to be a assessee. Akshay comes to the premises of Naveen and he says, Naveen, these are the taxes which you have not paid. You pay these taxes, otherwise I'll recover money from your bank account. Naveen says, okay, let me understand what you have demanded and what I have to understand. Before Naveen could act upon, if Akshay goes to the bank of way the Naveen is operating his bank account recovers that money. It is going to be an undue hardship on Naveen. At the same time, Akshay cannot put a notice in front of the office of Naveen saying that, look, these are the taxes which have to be paid but not paid. Just like that, Akshay cannot, being a government officer, raise allegations or recover the taxes which are due from Naveen as it is. As you understand, there is a recourse under the GST law, which we understand under this particular topic called demand and recovery. So in this particular topic of discussion, what we will understand, how the process of demand and quantification happens. What is the duty of a taxpayer and also responsibility of the taxman. When I say taxman, the proper officer. Now, it cannot so happen that Akshay has come for the inspection to the premises of Naveen on, say, 15th of Jan 2021, and somewhere on, say, 20th of Jan 2022, Akshay come for tax recovery. Means for every activity, there should be a time-bound activity. What is the officer expected to do? What is the taxman, the taxpayer, taxable person, or registered person? In this particular chapter called Demand and Recovery, we will understand how the quantification of demand happens. Once the demand has been quantified, how this gets communicated to the taxpayer, what is the responsibility of the taxpayer, and what are the time limits within which these aspects have to be dealt. In the process of this entire journey, what are the principles of tax administration with respect to recovery? How does the tax quantified by the officer concerned, how does it get recovered? What are the processes involved? All these particular aspects we will discuss under demand and recovery. Continuation to this, we will go further to understand what is the penal consequences, what are the appeal provisions. So here in this particular chapter, demand and recovery, precisely we will focus from the department point of view, how the officer can recover that money, how the officer communicates that, Praveen, you have to pay so much of tax, but you have not paid. In reply to this particular thing, what recourse Naveen as a taxpayer has got, we will study in further chapters for appeal and mechanism, right? So this is the flow with which your chapters have been set in your syllabus. I think, sorry, my Excel file has been kept on hold. I just noticed that. I'll just take care of that. Yes, Priya. Sorry, I have kept it on hold. I'll just take care of that. Okay. Namita has a question that why 96 is like this. It is not clear to me. And yes, Namita, in section 65, we have to count the 3 months from the day your last information submission to the satisfaction of the officer has been met. That is the process involved. Priya and Sairam, yes, ma'am. Sorry, I have noticed just now that Excel file is on hold. This is the aspects which we are going to study in today's discussion. With respect to Rule 96, payment of IGST on goods or services exported. I'll draw your attention to yesterday's discussion, Namita. Let me just see. Yeah, I think there was a mix and match of the files. Hope this is visible, Namita. Now, let's take an example, Namita. A registered person in Tamil Nadu has 4 divisions, A, B, C, D. This particular registered person has an accumulation of input tax credit, either from domestic unit where he is selling the goods, service unit where he is selling the goods, or 100% review, or even an export-oriented unit. For a moment, let us assume that there is a merger of company A with company B. Company B is a loss-making company. Company is an export-oriented unit. Now, there is always a possibility that when this kind of merger happens, there is an accumulation of input tax credit in my balance sheet. If you give a free hand under Rule 96, you export goods and services with payment of tax, all your accumulation which is there in your balance sheet also get encashed. So that is the reason they have restricted. Look, if you are a person who has received goods under merchandise export, let's take this example. Recipient pays 0.1% IGST. Let's assume that I'm talking about XYZ Private Limited. This particular entity, Namita, XYZ Private Limited pays 0.01% IGST. Say for a moment, value of goods is 35 lakh. Now, IGST paid. On this, I pay 0.1%. This is the IGST I have paid. Now, imagine this particular scenario where there is a valuation or profit margin of 10%. The supply value happens to be 35 lakh into 10%. Export value 35 lakh plus this profit margin 38 lakh 50,000. Now, you don't restrict under Rule 96. Imagine if you don't restrict under Rule 96, say IGST paid under Rule 96. Under Rule 96. Now on this, assuming 18% is a IGST, I'm going to make the payment. Now, difference on purchases. Okay, I understand that my picture is covering this slide. I'll just bring it over here. Yes. Now, see, the value of goods is 35 lakh. The value of goods is 35 lakh. On this value, I have paid 0.1% as a merchant export route. On this particular 3,500, I, XYZ Private Limited, can take the input tax credit. Now, for a moment, Namita, if I allow my Rule 96 route for every person without restriction, I purchase for 35 lakhs, I keep a margin of 10%. On this margin of 10%, my export value happens to be 38 lakh 50,000. On this 38 lakh 50,000, assuming if Rule 96 is not there, I pay 6 lakhs 93,000. Now, look at this scenario, Namita. 6 lakhs 89,500, a money which was actually not paid to the supplier, I'm claiming back as a money to my bank account. Isn't it a undue practice where giving a free hand to the exporter who has purchased under merchandise export route, if I permit for making the payment, on account of this merger, what we have done, a company which is a making company was taken over by a company which is an export-oriented unit. and this export-oriented unit has exported with payment of taxes. Now, what is going to happen? What I have paid is much less compared to the credit what I'm going to get back from the government. Government has to pay 6,93,000. Actually, I have paid only 3,500. This is the reason why Rule 96 has carved out to block this particular mechanism. Are we clear with this? Are we clear with this? Yes or no? Now, let's come back to today's discussion. Students, any doubts in relation to refund or in relation to the topics what we have discussed yesterday? Please feel free to ask me. Yes, Akshay, I noticed that you guys are not able to see the Excel file. I've changed this particular Excel. You have to excuse me because today I have changed my system. There is some trouble with the regular system. I need to adjust myself with this new system. Maybe another 5 to 10 minutes, I'll overcome with all these technical issues. Yeah. Great. Now, let me come back to today's discussion. Process of demand and recovery. Now, if you have to understand this aspect of demand and recovery, if you have to understand this process of demand and recovery, how it happens. Generally, there will be an audit which is conducted by a department officer under section 65. This particular audit officer gives a audit para where he says that, Praveen, these are the observations I have noticed with respect to your books of accounts. On the basis of these observations, there will be a notice. There will be a notice issued to me. I, as an assessee, I, as a taxpayer, have to either admit that show cause notice or I have to contest with the contents of the show cause notice. On the basis of my submission, see, there was a department who has conducted the audit. They gave their observations. I responded back to the observations. If the officer is agreeing to my observations, he will drop his para. If he is not agreeing, he will issue something called show cause notice. So again, what I will do, I go back and represent to the officer saying that, my dear officer, your audit party gave an observation saying that I haven't paid tax for so much of value, but please note that this particular tax already I have paid in my GST and PB. Now, if the officer still is not in the process of, is not able to understand, he issues the notice where it goes to the next level called adjudication. Based on the notice, the officer concerned calls me for hearing. Praveen, you come with your explanations and let me know what you want to explain. If the officer concerned doesn't agree with me, he passes an order called adjudication order. This particular adjudication order, I have a choice. Choice number one, you agree and pay whatever demand was created on you. You don't agree, you go for an appeal. Where do I go for an appeal? I go for an appellate authority or tribunal. Now, once the order is given by tribunal, again, two options comes to me. If it is in my favor, I'll not do anything. If it is not in my favor, I go for a high court, appeal to high court. Again, there will be a judgment served by the Honorable High Court. Again, outcome will be two. If I'm happy with the judgment of High Court, I will drop my case over there. If I'm not happy, I have a choice. Again, I'll go to Supreme Court. So this is the entire mechanism which is revolving with this chapter called demand and recovery, moving on to appeal and recovery mechanism. So appeal and revision, in the next another 2-3 sessions, we'll study how these appeals are going to happen. So first and foremost, my triggering point for entire discussion is my demand and recovery. Demand and recovery. So this happens when there is an audit conducted by the department officer under section 65. So based on 65 or 66, there will be a notice audit para which will be served upon me. Now, to start under this particular GST law, any notice which comes to the taxpayer, it will be either issued under Section 73 or it will be issued under Section 74. I repeat, I have two sections under which this particular notice can be served upon. First, Section 73. I have put the heading, says that reasons other than fraud. Reasons other than fraud. I'll just explain and I'll take you through this particular provisions. Section 73 says, page number come to page number 19.5 of your study material. Page number 19.5 of your study material. The heading says non-payment, short payment, etc. on account of reasons other than fraud, willful misstatement, or suppression of facts, covered under Section 73. Now, this particular determination where my Section 73 says that, Section 73 says that this deals with determination of tax not paid or tax short paid, tax erroneously refunded, or input tax credit which has been wrongly availed or utilized for reasons other than fraud, willful misstatement, suppression of facts. I'll come back to my Excel file to make you understand this particular provision. These are the elements which are discussed. Tax to be paid but not paid. Tax shortly paid. Refund was given wrongly. Input tax credit wrongly availed or utilized. Now, whenever there is an audit which has been conducted, the officer has to confirm what did the particular assessee has done. He has to register and pay tax but not paid. Tax not paid. He has registered but he has paid tax short. He has to pay rupees 1,50,000. He has paid only rupees 1,20,000. He has claimed a refund which is not in line with the GST provisions. Like example, Namita was asking, sir, I'm not happy with Rule 96. Why Rule 96 is blocking the credit in relation to merchant exports? Or there could be a mechanism where the input tax credit was availed wrongly. The input tax credit has been availed wrongly. Now, these all mechanisms have been covered under Section 73. Reasons other than fraud, willful misstatement, suppression of facts. Now, I'll come one by one to give you an understanding of this particular term called reasons other than fraud, willful misstatement, suppression of facts. I'll just give a couple of examples so that you'll understand the seriousness of this particular Section 73. First example, purchase of goods without tax invoice. Supply of goods without tax invoice. Purchases updated erroneously in GSTR 3B. ITC updated as rupees 81,000 instead of rupees 18,000. Fourth, application of refund though tax paid is not passed on to the customer. Principle of unjust enrichment. Now, students, I'll draw your attention to this particular para called fraud, willful misstatement, suppression of facts. Please understand, any tax statute, any taxing authority will generally try to attach these aspects to the taxpayer. Fraud, willful misstatement, suppression. Fraud. What do you mean by fraud? It is a general language where there is an existence of mens rea. It's a Latin word, mens rea. There is a state of mind to do something wrong intentionally. Fraud. I know that I'm selling goods where I have to collect tax, but I'm not collected. I know that I'm supposed to buy goods with a tax invoice, sell goods with a tax invoice. Intentionally, I skipped this particular tax transaction. Willful misstatement. I have given a balance sheet to the GST authority where turnover was understated. Willful misstatement. How does it happen? Intentionally. I gave a sales register for a particular month where few transactions I have eliminated. I'll just give an example with respect to willful misstatement. There is a software which is used for hotel industry. A fantastic case which has been discussed under service tax law, under VAT law. There is a particular company which has designed a software. This particular company did a programming. What happens if you walk into any of the hotel, you purchase tea, coffee, snacks, or some items, all petty items. If you see the invoices, on an average, a decent hotel which is having a very good brand name and which is in the prominent location, on an average 1,200 to 1,500 transactions happens in a day. Now, the beauty of this particular program is it erases few lines of sales automatically. Now, when you look at the invoices from on the day beginning, it starts with say 1501 and it goes on to say 1850. This is my closing bill invoice. Now, once the clock triggers 24 hours, 24 hours happens, automatically the program runs on its own and the invoice numbers change as 1501 to 1658. Now, what is happening here? The program has been designed to erase some records from your accounting software. And the gentleman who has designed this accounting software, he wanted to brand, he wanted to promote himself. So he has written end of it, program designed by so-and-so Varghese. He has written his name. And there was a clear-cut traceability that this gentleman happens to be from Kerala. Now, this is a willful misstatement. What they have done, they remove records from the transactions. So assessee, when he gives data to the GST department, when he gives some information to the officer concerned, he knows that some transactions have been hidden. That's called willful misstatement. Third, suppression of facts. Like example, Rule 96, where Namita was asking this particular example of a merchant export route. I, as a registered person, I know that there is a rule 96 which says that, Praveen, when you have imported goods under customs notification as a EOU, where you have not paid any duty on the inputs which you have imported, when you have not paid customs duty along with the corresponding IGST, you are barred from filing application under Rule 96. I know that I am a person who's not entitled for filing an application with payment of IGST. I suppressed my business transaction. I suppressed the purchases made as a EOU, and I filed my refund application. Now, all these culminate together as willful misstatement, suppression, fraud. Now, if you come to the transactions, purchase of goods without a tax invoice, you know that it is a punishable offense. It's fraud. Supply of goods without tax invoice, it's again a fraud. Purchases updated in GSTR 3B, 81,000 was wrongly entered as 18,000. Assuming for a minute, if you have noticed that you have taken a credit of excess, 81,000 minus 18,000, you have taken an excess credit of 63,000. Having noticed that you have taken excess credit, have you reversed that excess credit with interest? If not, again, it is a willful misstatement. Now, when it comes to, see, when this particular mistake happens, always we claim to the officer, sir, it's a human error. Instead of accounting 18,000, I have accounted as 81,000. Officer asks a question. Praveen, you tell me, while making the payment to vendor on 1,18,000, 1,18,000 is the bill amount. Have you paid 1,18,000 to your supplier, or have you paid 1,81,000 to your supplier? I'll laugh and say, my dear officer, I just paid 1,18,000. Look, you have said that it was a data entry mistake. Instead of taking 18,000, you took 81,000. Is it not a fraud? Is what the question department is going to ask to you. Application of refund, which is not eligible, again, suppression of facts. Having known that I'm not eligible, I filed my application. So students, please understand that these three aspects, fraud, willful misstatement, suppression, these are the aspects which will be tested in your examination with the problem concern. Right? Now, let me come back to my presentation. Yes. So this particular provision says, section 73, there is a determination of a tax to be paid by a person where other than fraud, willful misstatement, suppression of facts happens. That means to say, the registered person is not a fraudster. The registered person is not have done any misstatement. The registered person has not done any suppression. Question comes here. Sir, how do I prove myself? How do I prove myself that I haven't done anything wrong? Sir, is there a way where I can say I have not done a fraudulent activity? There is nothing misstatement. There's nothing called suppression. For doing that, you should disclose to the officer concerned if you have done anything wrong. You have to do a proper reconciliation. You have to have a watch and vigilance on your data, which is fed into the GST returns. Most of the time, it so happens that during articleship days, we are all fond of cut, copy, paste. What we will do, we will develop an Excel file for the purpose of tax calculation. When it comes to the next SSC, the same Excel file will just copy paste to the folder. We'll just change the name of the SSC, change the PAN number. And at times, few figures do come as it is. We don't even see that there is a chapter 6A deductions which were not to be applied. Say a senior citizen file has been copied to an ordinary citizen. You will give a benefit of that above 65 years and you claim certain deductions, which is not entitled per se. Now, those are the aspects which culminates to say that on records, if there is assessee who has not done a fraud, willful misstatement, suppression. In those cases, I call all these three elements as an allegation. An officer concerned, a proper officer, where he understands that any tax which has not been paid or short paid, or there is a refund which was given erroneously, or ITC wrongly availed or utilized by a registered person. In these cases, this particular proper officer shall serve a notice on that person. Now, when a notice is given under section 73, we have to understand that there is no fraud, willful misstatement, suppression. These three does not exist. So this particular officer will give a notice which is called as a show cause notice. Officer gives a notice to show cause why he should not recover that tax from the registered person. As to why, he will give a show cause notice as to why that he should not pay the amount specified in notice. I am giving a notice. Look, this is the amount you have to pay. Where, as per the notice, along with interest under section 50 and penalty leviable under the provisions of this act. So my show cause notice has got three elements. Element 1, tax. Element 2, interest. Element 3, penalty. So officer concerned issues the show cause notice. Praveen, you're supposed to pay tax, along with tax, interest, along with interest, penalty. Now, imagine for a moment that there is a transaction, 1 lakh is the transaction value, on which tax rate happens to be 18%. 18,000 tax, interest of 18% per annum, and penalty, for a moment, assuming 100% of tax. After 2 years, if the officer comes for recovery, interest of 18% per annum, 2 years, 18 plus 18, 36%. Penalty equivalent to tax. Imagine the fate of the assessee. So this is the importance way a notice when it comes, we need to understand what are the amounts which are being demanded. Now, so what is the time limit for an officer to issue a show cause notice? This particular provision says that the time limit is what is the due date for the respective financial year, 17-18, 18-19, 19-20. For every year, you see what is the due date for filing annual return. From that due date, within 3 years, there should be order to be served under section 73. And to serve an order, 3 months prior to that particular order, a show cause notice has to be issued. Now, this is how my time limits are set under GST law. So let me come back to my Excel file. For financial year 17-18, say due date for filing annual return is 30th January, say 31st January 2019. Now, assuming that for financial year 17-18, my due date is 31st Jan 2019. Law says that under section 73, within 3 years from that due date, order should be passed. Right? Now, so due date for order on or before 31st January 2022. 19 to 20, 20 to 21, 21 to 22. 31st Jan 2022 happens to be the due date for passing an order under GST law. And to pass an order, at least 3 months prior, a show cause notice has to be given. So if I travel back in time, Jan to December, December to October, November, so October to November, November to December, December to January. 31st October 2021. Now, this is what happens when a show cause notice has to be issued in relation to in relation to my section 73. So the law says that officer doesn't have a free hand. Officer does not have a free hand. Officer has to issue a show cause notice first to determine what is the tax payable. Once a notice is issued, then an order has to be issued for recovery. So the time limit for financial year 17-18 will be 31st October 2021. From there, November, December, January. 3 months where order has to be passed. So the timelines for me to issue a show cause notice under GST law is revolving with something called due date for filing annual return. Clear, students? This is what you need to understand with respect to issuance of a show cause notice under GST law. Coming back. So my section 73 has given what is the time limit within which a show cause notice has to be issued. Now, what if there is an order which has been passed from the date of order? From the date of order, I have 3 years to issue an order under 73. Prior to that, again, within 3 months, I have to issue a show cause notice. So in relation to order, it is revolving with my erroneous refund, not with respect to annual return. Next, issuance of a statement. Now, we all know what is a show cause notice. There could be a possibility that officer has issued a show cause notice. That particular show cause notice has got some data which was missed out. Most of the times it so happens that the officer, once he has given a show cause notice, there will be a committee of the officers. Every month, these officers meet together and say, so for this SSC, these are the audit paras given. In this particular meeting, commissioner comes with his view saying that, my dear officer, why didn't you check this inventory? Why don't you check this particular provision? There could be some additional points which was not noticed by the officer, which would have been given as an input by the commissioner. And if there is a tax recovery possible on those additional points, that officer can issue, in addition to show cause notice, a statement which is in addition to show cause notice. Now, whatever provisions are there in relation to show cause notice, same gets carried to the notice. Now, moving further. Now, this particular slide is the important point under your advice to the clients. Section 73, subsection 5. Most of you would have heard while filing GST returns, while advising to the clients, there is a form called DRC 03, intimation of tax payment along with interest or penalty to the officer concerned. Under section 73(5) or 74(5). Now, this particular form, DRC3, is like a Vajrayuda. Why? Whenever something is done wrong, sir, I as a taxpayer, I have to pay 20,000 rupees as tax. While doing the data compilation, one transaction got missed out. I haven't paid that 20,000. So this law says that you can go ahead and make the payment in a GST 3B, or you can use DRC 03 for making an intimation to the officer concerned. So this DRC 03 draws its power under section 73(5), section 74(5). Now, let me come back to this particular 73(5) to make you understand what is the importance of this provision. This section 73(5) says that a person who is chargeable with tax, who is that taxable person? Registered person. Before serving of a notice or a statement, pay the amount along with interest. So tax plus interest. Whatever tax you have to pay, For that, you also pay interest under Section 50 on the basis of own ascertainment or tax ascertained by the proper officer, and inform the proper officer in writing. Now, filing of this DRC 03 electronically is as good as intimation to the officer in writing. Now, students, just keep in mind, I use this particular form called DRC 03, which is notified under this 73.5. Why do I use that? Sir, I have to pay tax. I have not paid. So you pay your tax along with interest, and you fill this particular form called DRC 03. That is as good as a communication to the proper officer in writing. What happens? What happens when I do this communication? Now, once this intimation is received to the proper officer, the proper officer on receipt of such information or intimation shall not serve a notice, or as the case may be, statement. The beauty of DRC 03 is, once I make the payment of tax and communicate to the officer, show cause notice or statement is avoided. That means officer will not disturb me. The officer with consent will not raise any demand on me. So this recovery of money by way of a show cause notice does not happen. Getting the point? For what? In respect of the tax, so paid. Look, you have to pay money you have already paid, or a penalty payable if you have already paid. I will not issue any show cause notice. Most of the times, students, all these MNCs, multinational companies, they have an expectation. They expect that the taxes have been duly taken care. The moment a show cause notice comes, there will be a red alert on the concerned CEO or CFO. They feel that this particular gentleman has not been doing his job properly. That is the reason I'm getting a show cause notice. And most of these MNCs are worried to get a show cause notice. They try to get away taking a show cause notice. So any mistakes they do come across, they make an intimation to the proper officer under 73.5. Let me see any questions so far. There's one question with respect to this rule 96. So that 6,89,000 which XYZ get back to his account, which was earlier deposited by XYZ only. Namita, please understand, you're not getting the practical aspects of this rule 96. In relation to merchandise export, this gentleman paid 3,500. Government wants to give only that 3,500. And if you feel that this registered person has paid 6,89,000, under what route? Is it for zero rated? Is it for inverted duty structure? Under what route? You have to understand the business model and then define from where this accumulation is happening. So practically, if you understand various business things, then you'll have a better clarity on this point. Further, there's one question again by Namita. Commissioner cannot direct assessing officer to handle any case in specific manner. How here Commissioner can advise assessing officer to look inventory or other records? See here, in an audit commissionerate, there is every GST office has got an audit commissionerate. What they do, they have a weekly discussions. They have a monthly discussions. In those discussions, the concerned proper officer, he will put across in the governing council that these are the audit paras which have been put forth. For those audit paras, these are the points which were given by the assessee. In the process of discussion, the concerned additional commissioner, joint commissioner, commissioner, they give their views to the audit officer, that is a proper officer. Have you looked into this? The assessee is coming with so-and-so contention. Have you looked into this particular point? So there will be a direction given by the learned commissioner or a joint commissioner or additional commissioner to advise what all other areas can be looked upon to defend or to do further investigation. Sir, when a show cause notice is already given, can I give one more show cause notice? The law says once a SCN is given, no need to give another show cause notice. You can just give a statement which is like an appendix to the original show cause notice. Law has got a mechanism for that. Apart from that, there are no questions. Let's come to our discussion further. Now, further, sir, I have made an intimation under 73.5. Once the intimation is made under 73.5, the proper officer has an opinion, has an understanding that whatever amount was paid under subsection 5 is short than actually payable. The taxpayer has to pay, say, 10,000, but he has paid only 8,000. Then he can proceed to issue a show cause notice to the extent of where there is a shortfall. Like example, 8,000 was paid the taxpayer, 10,000 was determined by the officer. To the extent of balance 2,000, officer can issue a show cause notice. Further, where a person is chargeable with the tax as per the show cause notice, he pay the said amount along with interest under section 50 within a period of 30 days from the date of show cause notice. No penalty is payable. Now, officer has served a show cause notice to me. When a show cause notice is given on to me as a taxpayer, I have two choices. Choice number one, you agree with the show cause notice and pay the tax. Choice number two, don't agree, try to put forward your argument. So this section 8 says that if a taxpayer makes the payment of tax along with interest, how many days? Within 30 days. Within 30 days, if I make the payment, I need not pay penalty. My penalty is avoided. This is what covered under section 73, subsection 8. Students, please keep in mind, this is on account of an allegation other than fraud. So what happens? There is a show cause notice. I didn't agree with the show cause notice. I have given my submissions. It goes for a adjudication. The concerned officer will take into consideration submissions made by the taxable person. He'll also take into consideration the officer, whoever have done the audit. Just to give an example, say superintendent has come for audit, he did an audit. Superintendent has given a show cause notice. I have replied to the show cause notice. So this show cause notice comes before assistant commissioner. My reply also comes to the assistant commissioner. Assistant commissioner will be called as a adjudicating authority. So this particular adjudicating authority, if he agrees with the assessee, he will drop the show cause notice. So what if adjudicating authority is not agreeing with the submissions of the registered person? Then he passes something called order. So this particular order, the proper officer, after considering the representation made, if any, by this person, he will determine the amount of tax, interest, and a penalty, which is equivalent to 10% of the tax or rupees 10,000, whichever is higher. So this particular assistant commissioner, he says, Praveen, you pay this tax along with this interest and a penalty, which is what? 10% of the tax or 10,000. 10% of the tax amount or your 10,000, whichever is higher. So this officer, the assistant commissioner, quantifies the amount by way of an order. So what happens? I change my mind. I don't want to argue. Let me go ahead and close this particular matter. Now, what happens here? I have to, if I make the payment, there will be a sparing of my order. I'll draw your attention to page number 19.14. Page number 19.14. In page number 19.14, they have given your cases of 73.4, cases of 73.5. So if you see point number 1, 2, 3, 4, these are the various stages. Stage where show cause notice was given. Stage 2 where within 30 days of show cause notice amount has been paid. Stage 3 where amount was paid within 30 days of communication of a show cause notice. So if I make the payment within 30 days, I have to pay tax, I have to pay interest, also a penalty which is 10% or 10,000, whichever is higher. Now this is what we need to understand from this particular table. Now this is one slide which explains that penalty, which talks about penalty in case of self-assessed tax, where a self-assessed tax or an amount which is collected as tax. Self-assessed tax, that means the return in which I have to pay my tax, my output tax minus what is the input tax, that is called self-assessed tax. A self-assessed tax or amount which is collected as tax, which has not been paid within 30 days from the due date of payment of tax. Which has not been paid. So this provision says that a registered person who has to pay the tax defaults beyond the period of 30 days, then he has to mandatorily pay penalty. How much is the penalty? 10% of my tax amount or 10,000, whichever is higher. So as per this subsection 11, as per subsection 11, you have to keep in mind, I as a registered person, if I default to file my return beyond a period of 30 days, my tax was short paid. So in that case, penalty is something which has to pay to the extent of 10% of tax or 10,000. This is one provision which can be used by the officer concerned for recovery of taxes. Now, from here, we move into the next provision called 74. 74 covers those aspects where the assessee has to pay the tax under fraud, willful misstatement, suppression of facts. 95% of the time, a notice is given by the department officer under section 74. The reason, one, the time limit is for 5 years. Second, the reason this amount which needs to be quantified, penalty is at a higher scale. For that reason, always notice is issued under section 74. Now, coming before that, there are a couple of questions. Let me just take quickly. Sairam is asking this question. Sir, in DRC3 filing, mostly DRC3 is filing of annual return or any other case. We have to use this DRC03 either in the case of annual return or the regular tax payment to be paid. In any of the cases, I can use DRC3, Saira. I'll give you examples. Assuming that there is a notice which is given by the department. Let me come to my Excel file to make you understand this. DRC03. First, you can use where amount of tax identified at the time of annual returns. Most of the time, when we do the reconciliation, GSTR 1 versus 3B, GSTR 3B versus books, GSTR 1 versus books, e-way bill versus books, lot of reconciliation we do. I notice that some tax to be paid but not paid. At that point in time, I can use DRC03. This is one particular mechanism. Second, section 61. Section 61. What is that? Scrutiny of returns. It could so happen that I have to pay tax, but I have shortly paid. My officer has noticed that Praveen, you have claimed, you have showed your output tax of 10,000 in GST account, but you have shown only 1,000 in your 3B. There is a shortfall of 9,000. I could very well pay that particular tax using my DRC 03. Third, departmental audit under section 65. Whenever there is a departmental audit, officer concern says that, Praveen, you have claimed input tax of so much, but your vendor who has filed his return only is appearing to the extent of so much. And this particular vendor has defaulted in filing his returns. Then I may admit that because there is a non-compliance with section 16, I offer for payment of tax. Again, I can use this form called DRC 03. The only point you have to take care is, am I using, is this paid under section 73(5) or paid under 74(5)? Now, 73(5), this is particular case where, this is a case where I have no intent to do fraud. There is no willful misstatement. There is no suppression. In case of a 74, the government has established that there is a willful misstatement, fraud or suppression. So I have to choose which form I have to adopt. Next, there is one more question from Sairam. So what is amnesty scheme? Amnesty scheme is a mechanism, is a particular mechanism where government comes forward and says that I will give you a waiver of some penal provisions. I'll give you a waiver of interest. Like example, under service tax, we had this scheme called Sabka Vishwas Legacy Dispute Resolution Scheme, SVLDRS scheme. Under this Sabka Vishwas scheme, the government has come forward and said, if you're a registered person who have not paid taxes, you have received a show cause notice, so much of amount has been quantified, I will waive off interest, I will waive off penalty. So government once in 5 years comes with this amnesty scheme, keeping in mind all those people who have been willful defaulters. And in India, many businessmen do wait and watch for this amnesty scheme. Why do they wait and watch? They have collected money, they have used the tax for their working capital purpose, and now they have to pay those taxes with interest and penalty. They feel that it is burden to pay the taxes. That's why they will wait for amnesty scheme. Coming back, section 74, which deals with mechanism of tax which was not paid. This deals with taxes not paid, short paid, erroneously refunded, or input tax credit wrongly availed or utilized on account of fraud, willful misstatement, or suppression. Now, on record, the officer has a reason to believe that the registered person has committed fraud. The registered person has done a willful misstatement, or he has done a suppression. Now, any of these reasons, my provisions of 74 can be invoked. Now, everything is similar to 73. The only reason is that here my time limit for issuance of show cause notice, my time limit for issuing an order is little higher compared to section 73. Now, this particular section explains what do you understand by suppression. The term suppression means non-declaration of facts or information. Non-declaration of facts or information. Question comes here. Sir, I have opened my business at shop door number 150. I have been doing my business. Over a period of time, I felt that the space is constrained. I want to have a godown. 4 buildings from this building, I have taken a godown. I stored my excess material in that godown in building number 154. Does it tantamount to suppression? The goods which have been stored in building number 154, does it tantamount to suppression? Answer is yes. When I have taken a registration, I have not declared the facts or the information in relation to my registration. By virtue of that, also my section 74 can be invoked. Now question comes here. So my material is lying at shop number 154. How can the tax be determined? If you recollect your provisions of section 35, read with rule 56. Rule 35 clearly, section 35 clearly says that material which have been kept at a particular place, which have not been permitted as an additional place of business, it shall be presumed that you made a supply of those goods but not paid the taxes. So section 74, a show cause notice will be given for recovery of the tax with interest with penalty. Now the question comes here. So you're saying that it is a suppression. You're saying that the tax to be paid along with penalty. So what if I have added this as an additional place of business? Now it is not a suppression. So the government officer comes with the allegation that Praveen, you have to pay the tax but not paid. Now he will not presume that Praveen has got a good track record where I have to issue a notice under 73. He says that Praveen failed to explain how does this come in, like in practicality, from where these aspects come into picture. The officer who comes for audit, he'll say, give me your inventory records. Based on the inventory records, he goes for a physical verification. In the process of doing physical verification, there is a shortage. Now, as usual, the accountant or the stores in charge who doesn't know the tax provisions, who gets himself comfortable with the tax officer, he keeps on discussing every nuances which is happening within the company. He will say, so my management is not paying my salary properly. My management asked me to do this particular thing. My management asked me to keep the material over there. No, there are certain people who talk more than what they are supposed to talk. And they purposefully land up this register person to get into trouble. If the employer is not good in terms with this employee, it happens. It could be a genuine conversation or it could be a flimsy conversation. But in the process of your physical verification, if the material is stored at another place, provisions of 74 will be invoked. What they say, boss, you've done a suppression. Also, where a taxable person is required to declare in the written or a statement or report or any other document furnished under this act. Now, question comes here. Sir, I did supplied 50 laptops in a particular month. In one case, it so happened that instead of one laptop, 2 laptops were supplied. On a understanding that if the customer is happy with the second laptop, I'll raise the invoice. Some reason that second laptop which was supplied on a delivery challan, I forgot to raise the invoice. Provisions of section 31, sale on approval basis, 6 months is the time limit. Now I have disclosed that there is a laptop which was given. Unfortunately, no delivery challan and in tax invoice, I have not disclosed that item. Now, this again is tantamounting to suppression. So what if I have sent a tax invoice for one laptop, I have issued a delivery challan for another laptop. I repeat, I have issued a tax invoice for one laptop. I have issued a delivery challan for the second laptop. I have not regularized within 6 months. Does it tantamount to suppression? Now I will say on records, there is a delivery challan. When I file my GSTR1, there is a table 13 document history. Other than supply, I will see delivery challan 01 to delivery challan 05, which has been issued in a particular month. That one of the document 1 to 5 was used for this laptop. Can you call suppression? I'll say it is not suppression. So this is how we need to protect ourselves. Failure to furnish any information. On being asked for in writing by the proper officer. The proper officer asks, Praveen, give me your bank account. I have a hesitation. Why should I give you a bank account? In your section 35, they asked me to maintain certain books of accounts, read with rule 56. Rule 56 talks about your inventory records, sales register, purchase register, vendor and creditor customer details, and inventory, tax payment details. It never asks for bank statement. Why should I give a bank statement? So in case if the officer asks for certain information which is relevant for your books of accounts, we are duty bound to provide that information. So this is defined as by suppression. Examination. 2 marks theory question. Define the term suppression for the purpose of issuance of a show cause notice. Expect this slide which will be asked for 2 marks. Now, there is one question I think Mansi asked in the previous session. What Mansi was asking, sir, is it important for us to remember all the relevant dates? I would say not all the dates are important, but few dates, like example, we have discussed 73, 73.2, read with 73.10. What is the due date for issuing an order? What is the due date for issuing a show cause notice? I have to remember those combination of dates, ma'am. Or this 3 months for the purpose of section 65 audit. When an officer comes for audit, within 3 months he has to close the audit. Few aspects of that, sir, we have to remember. Now, when a show cause notice has come, assuming 15 days or 30 days, I have to respond back. Sir, I don't remember the dates. What should I do? When you present your answer in the examination, the registered person has to respond back to the show cause notice within the time prescribed as per the provision concerned. Please mention that. Don't hesitate. If you don't remember 30 days, you erroneously quote as 15 days or you quote as 7 days. It will land up you into a trouble. So if you don't remember the days, you can just mention as per the days prescribed under so-and-so provision. That is good enough. Now, 74 says that any officer who has a reason to believe that the tax was not paid, short paid, erroneously refunded on account of fraud, willful misstatement or suppression, he has a right to issue a show cause notice. What does it say? He will issue a show cause notice on the person to give a reason why this input tax credit, why he should not pay the amount along with interest, along with penalty. So he'll say, pay the tax or and interest and penalty. So these are the 3 aspects he will quantify in a show cause notice, right? Next. Now, as we expect in 73, my due date is 5 years. In case of 73.5, it is 3 years. In case of a show cause notice, it was 3 months. It is here 6 months. So what they say, from the due date of filing of annual return, within 5 years, an order should be served. Please remember, as per the law, before an order, a show cause notice has to be served. So to serve a show cause notice, I have to have 6 months gap from the day I have to issue my order. The time limit to issue an order is 5 years from the due date of filing my annual return. This is the time limit which we need to remember for my examination purpose. Now, so what happens in case of an order? From the date of issuing the order, I have this 5 years time limit. Next, similar to your section 73, addition to show cause notice, a statement can be given. What is the purpose of a statement? Any point which he has forgotten, which you want to quantify, that can be quantified in case of my order. Sorry, in my statement. Now, as I say, section 74, subsection 5. The beauty of this section 74 is I pay tax, I pay interest, and also I pay penalty. How much? 15%. I pay penalty 15%. Now, I give an example. This is only for academical purpose. I wouldn't recommend you to implement in your day-to-day life. Just to make you understand why this 15%, how this 15% comes into picture. Again and again, I'm making a disclaimer, students. Use this example only for academical understanding. Don't use it in your day-to-day life as a advice to the clients. DRC 03 under section 74. Fine. Now, so there is a assessee, Mr. A, supplied goods worth rupees, say 22 lakhs. GST applicable 18%. Now, I'll put value GST. Also, I'll just put particulars. My sales, the value 22 lakhs. And GST applicable at the rate of 18%. Purchases, say he has purchases of 14,50,000. On this, he has paid an input tax credit of 2,61,000. Now, 1,35,000 is a tax which he needs to pay, and he has got a balance in bank account. This gentleman has a balance of 1 lakh only. Now, this particular Mr. A has got a problem. He doesn't have enough money to file returns. Now, as per the contract, customer makes the payment only when this gentleman, Mr. A, files his GST 1, files his GST 3B, goes back with the evidence to the client. So here, this gentleman requests to add notionally that 35,000 to input tax credit. Now, I'll just put it in red color. So what happened here? Actually, this particular A has a ITC entitlement only to the extent of 2,61,000. Now, since he doesn't have sufficient balance, he requests the accountant to add 35,000 as ITC, file the return. Once the returns are filed, client is releasing the 3,96,000. Then he will use this DRC 03. He is using DRC 03 to pay tax, interest, penalty. Now, tax he will pay how much? 35,000. He will pay interest for 1 month. 18% is per annum. I'll say 35,000 into 18% divided by 12. Penalty of 15%. This is what he is going to pay and remit his DRC 03. Now, why is it happening? ITC of rupees 35,000 evaded fraudulently. Now, to get a bank loan, he has to draw money from a banker, where assuming he has to pay 18% as a working capital loan. Now, 18% is what he has to pay. And this money gets prolonged. Like that means to say, as long as he doesn't pay this tax, this 3,96,000 is not going to get back from his assessee. he does a calculation of mathematics saying that 18%, if I get in 1 month time, I'm going to get this amount as an interest which is saved. So this is all mathematical calculation which is done to get away from this particular tax provisions. So what he does, he comes back and remits this tax with interest, with penalty, and gets away from this assessment provisions. I just gave an example for you to understand why penalty of 15% is advised. Now, this is how law works. Don't recommend, don't make this as a practice. So as of now, my section 74 talks about making a remittance under subsection 5, where if a penalty of 15% is given, there is no show cause notice expected by the department. Now, before I go further, let me see if there are any questions so far. In section 65 example as records. Okay, Namita, this records doesn't mean I just give the records, Namita. The records along with that explanation. I have to give a reason why my profit and loss account is not matching with my GST returns. I have to explain why input tax as per my books is not matching with my returns. Now, along with the records, the relevant information attached with that records should also be provided. I just give a bank statement. I don't explain why that there is a difference. Then it doesn't mean that records are given. I have to give a records with relevant explanation concerned with that records. It has to be read in tandem. That is how this provision has to be understood. Sairam is asking this question: is amnesty scheme good or bad? Good for the taxpayer, bad for the public at large. Why? Public at large, the tax, whatever has to be collected, is used for public purpose. So it's a public money. So it is not good for the public, rather it is good for the taxpayer. Is there any, Akshay is asking this question, is there any person who is not required to file annual returns? How do we calculate DSCs? Okay. See, Akshay, when I come to the session called returns, I'll explain with respect to for whom it is applicable, for whom it is not applicable. As of now, please keep in mind, I can use DSC3 wherever I have not paid taxes. I want to make an intimation to avoid receipt of show cause notice. Namita is asking this question. In section 35, if the assessee has all invoices for material in godown, see, you can have invoices for material in godown, but have you stored in a place which is declared to the GST office? If no, then it is deemed that you supply the goods and those goods are lying at that particular location. Further, Namita is asking this question. If EA has sold this material from the job work premises directly, which is not declared as an additional place of business, section 143, Namita, if a job work is registered under GST, a registered person can supply the goods from a job worker premises. No need to have a additional place of business of a job worker. If the job worker is not registered under GST, I have to add the job worker as an additional place, and then I have to remove from that particular job work premises. So this is the answer to your question, Namita. Further question from Namita, section 74. Before a show cause notice, officer communicates the details of tax, interest, penalty chargeable. If you recollect this section 61, there is a inquiry, there is a proposition document, or there is a, I wouldn't call it a show cause notice. Say show cause notice comes when a inquiry happened, information has been sought. Prior to show cause notice, officer sends an intimation. You refer to section 61, section 62, section 63. Any notice which has come under these sections, this is not a show cause notice. It is just an inquiry that your data doesn't match with so-and-so data. That is how intimation by proper officer comes into picture there, Namita. I filed my returns. There was a mismatch in my GST versus 3B. My officer sought a clarification. Praveen, why there is a mismatch? Now that is a inquiry, that is an intimation by a proper officer. You can refer to section 61. Moving further, Akshay. So it is better if we take loan of 35,000 today to pay the GST. This I agree, Akshay. Practically, what if bank does not give loan? What if there is no entitlement for or there is no security to apply for a loan? Now, there are practical reasons why loans are not looked upon. Further, Sairam is asking this question: what if a customer does not pay the tax amount? Then provisions of section 16 will be invoked, where this demand and recovery, tax to be paid but not paid. Your supplier has defaulted in paying the tax, and this was not disclosed in his returns. It will be recovered under section 73. Right? Moving on further, 73.5 we have understood. Now, as expected, once there is intimation under 73.5, officer will not issue show cause notice. Now, what happens if there is a shortfall? I have paid 35,000. Officer feels that, Praveen, no, it is not 35,000, it is 55,000. Then to the extent of 35,000, where a 74.5 intimation is there, he will drop that, and the balance 20,000, which he feels, he may issue show cause notice. Now, please remember, when a show cause notice is given under 74, this show cause notice says that, Praveen, you pay the tax which is demanded under this notice, pay the interest under section 50, please pay the penalty under 74 to the tune of 25%. I voluntarily pay earlier, it was 15%. Rather, if I get a show cause notice, this penalty from 15 goes to 25%. Moving further. So what if this particular show cause notice I have not agreed, rather I have gone for contention. Officer, adjudicating authority also has not agreed with my contention, and he has rather determined the tax along with interest and penalty. So he will say, you pay the tax, you pay the interest, and you pay the penalty, which is quantified, which is nothing but amount equivalent to the tax. Right? This is what he is going to confirm. Now, so what if I agree to pay the tax, I agree to pay interest, I also to agree with penalty, then my penalty earlier under show cause notice it was 25%, now it gets reduced to 50%. See, generally what happens, students? Generally under 74, this was written as 73, please read this as 74, section 74. Under section 74, penalty is equivalent to, penalty quantification is equivalent to tax amount. The officer says, you are a fraudster, you have done willful misstatement, you have done suppression. Why should I reduce the penalty? He says, my penalty will be equivalent to tax amount. This is what the proposition will be made. So if I pay within 30 days of this receipt of show cause notice, the penalty from 100% gets reduced to 25%. Rather, I go to pay the moment I receive an order. From 100%, it gets reduced to 50%. So what if I don't pay even after 30 days? This 25%, 50% becomes 100%. Becomes 100%. Now, there is something called proceedings in the said notice. This shall not include section 132. Section 132, yesterday we discussed this, what you call cognizable offense. Means an offense which is punishable offense where without a warranty, you can be put in behind the bars, right? This proceedings under a notice does not include proceedings under 132. Now, it so happens that whenever proceedings, that means the officer initiates the recovery along with the main person who is liable to pay the tax, some other person who also will be added as a party in the show cause notice. Generally, it will not be taken into action, but exceptional cases. I'll give an example. Say there was a fraud where input tax credit has been taken without actually existence in books of accounts. Example, in books of accounts, when you look into the purchaser says the value of purchase is 30 lakhs. On 30 lakhs, assuming the credit is 5,54,000. But in returns, the input tax credit taken was 8,40,000. I have taken much higher than the tax which was accounted in my books of accounts. That could be called as a fraud. Now, in this scenario, the officer attached some other person who's concerned, who's connected with the business activity. Why? The government officer would like to punish every person who's connected with the day-to-day affairs of this particular business. So in general, CEO, CFO, or Director of Finance, or Accounts Manager. The person who is connected with the day-to-day affairs of that particular company, his name will be added in this particular show cause notice, where a penalty, maybe up to a sum of rupees 50,000, 1 lakh, etc., will be added to pay in addition to the duty quantified. So, when the notice is issued under the same proceedings, the person who is liable to pay the tax and some other person on whom penalty provisions are invoked under 73-74, those proceedings, if it is dropped under section 73-74, it is deemed that these proceedings are against all these persons under this section 122, 125, 129 are deemed to be concluded. They say that when you come to this section 122, 125, 129, 130, these are the provisions where they define what is the penalty, on whom a penalty can be levied. This section 122 gives the authority. A person who has abetted, a person who has supported, a person who has helped the main person to do that particular offense also will be held responsible. So this particular expression says that if a show cause notice is dropped, if an order has been dropped under 73 or 74, the penalty imposed on such other person also deemed to be dropped. This is what we have to understand. Next. Section 75, which deals with your general provisions relating to determination of tax. Let me see if there are any questions so far. There's one question from Namita. So will it be suppression if job worker is not registered? If job work is not registered, it will not be suppression. If you as a registered person, if you want to remove from the premises of a job worker, it will be called as a suppression. Akshi says, it is good to take a loan from friends and family. Yes, I do agree with that. Coming back. Period of stay. Now, the provisions which are connected with determination of tax. Now, we know that under 73, under 74, there is a time limit of 3 years, there is a time limit of 5 years. So what if there is a notice where the serving of a notice or issuance of an order is stayed by a court or tribunal, where service of a notice or service of an order is stayed by an order or a tribunal. I'll give you an example. The other day, we discussed the example of Mohit Minerals, where this import of transport on which I have to pay tax on reverse charge. Assuming for a moment, I got a inquiry proposition notice from the department. Praveen, we see that from your transactions, you have imported material through sea. For that particular import transaction, you haven't paid tax under reverse charge. There was an inquiry letter. The moment inquiry letter comes under section 61, 62, I know very well. Next to this notice, order will be passed on me, or a show cause notice under 73 or 74 may be issued. I, as a registered person, I can knock at the door of a high court. I can knock at the door of a tribunal. As of today, tribunal is not in existence. Most of the time, I go and invoke Article 226, where a writ petition will be filed. So the Honorable High Court will give a direction to this proper officer saying that, my dear proper officer, this particular matter has already been examined. It is under due consideration by Honorable Supreme Court. Don't take any action till this particular matter has been settled with. So when this particular stay was given, that particular period will be excluded. That period will be excluded for what? For this time limit under 73, 74. For issuance of a show cause notice, for passing an order under 73 or 74. So this provision says that whenever there is a stay from a tribunal or a court, by issuance of a show cause notice or passing an order will be, the time limit will be excluded for that particular time limit. Next, failure to establish fraud, willful misstatement or suppression. Now, in general, we call extended period, invocation of extended period. Instead of 3 years, 5 years has been invoked. Now, that is called failure to establish. I go to the concerned appellate authority, I go to the tribunal or a court, and I say to the respective authority concerned, my dear officer, look, I gave my books of accounts, I filed my returns, I maintained all the transactions. There was one instance where I have failed to disclose in my GST returns. However, this information was available in a delivery challan register. This information was available in the sales register. This information was available in the signed financials. When I prove to the concerned authority that there was no fraud, willful misstatement, suppression, or there's no mens rea, in that particular case, my notice which was issued under 74 will be set aside and provisions of 73 will be called for. Right? So they say my 74 is not possible. Rather, you go for the time limit which is set under section 73. So instead of 5 years, 3 years comes into picture. Now, generally, whenever there is a stay, whenever the concerned person, the concerned proper officer does not respond to my request, like I have to get an order, a refund, but my refund was withheld. If you remember yesterday, we discussed something called scrutiny of summary assessment, section 64. In case of a summary assessment, there was XYZ Private Limited, a software company, Mr. A, who happens to be a proprietor. Because of Mr. A, who did a fraudulent activity, my refund was withheld. I can approach an appellate tribunal, I can approach a particular court to get the order passed. So once I get a direction, the concerned officer, within a span of 2 years, he has to pass an order from the day the communication has been received from a appellate authority or a tribunal or a court consent. This is what explained under my section 75. Next. I was talking about principles of natural justice, article 14. Many assessees go and file a writ petition. What did they say? My lord, I have been given a show cause notice. I was just given a day to respond to the show cause notice. 22nd evening, 5 p.m. there was a mail received for a show cause notice. 24th early in the morning, the order has been served. Principle of natural justice has not been met with. This provision says that opportunity of being heard shall be granted, means it is a compulsion to where a person must communicate in writing that let me be heard before you demand tax, before you demand penalty, before you recover money from me. So When there is a request from the person concerned, principles of natural justice, opportunity of being heard should be given. And adjournment. So whenever there is a hearing which has been posted, I was called for a case to represent. The day when I had to represent, due to some reason, I couldn't go and appear. Or it could so happen that I have two hearings. One hearing is in south direction, another hearing is in north direction. One is at 10:30, another is at 11:30. It is not practically possible. I finish a hearing at 10:30 and I can go back for hearing at 11:30. So in this case, I can seek for adjournment. When I seek for adjournment, the officer concerned is duty bound to give an adjournment. And any particular matter, maximum up to 3 times adjournment can be given. Whenever an order is passed under 73 or 74, it should be a speaking order. I use a term called speaking order. That means to say, the concerned proper officer has to clearly put out all the facts. And what is the reason he has to believe why this particular order has been passed. So I draw your attention to this point once again. Wherever this particular order has been passed, the officer concerned has to clearly explain what are the provisions he has relied upon, what are the evidences the officer has given, what are the documentary evidence the register person has given. All this information he has taken into consideration, and then he has communicated this order. If these facts were not properly brought in, or the reason he has not brought in, then this order is not said to be an order which is passed in line with the law. Next important aspect, a tax interest penalty. A tax interest penalty which has been confirmed in an order shall in no case be excess of the amount which was specified in a show cause notice. The show cause notice was given to me where demand of tax of 10,000, interest of 1,000, penalty of 5,000 was imposed. There could be a possibility that the superintendent who has given a show cause notice quantified 5,000 as penalty. The order passed by assistant commissioner cannot say that instead of 5,000 as penalty, 10,000 as penalty. No case my adjudicating authority can issue an order excess of the amount which was quantified in my show cause notice. Again, these are the general principles which are governed with respect to the discipline when an order has to be passed. Now, it can so happen that I will go for an appeal to appellate authority, a tribunal, or a court. As of now, tribunal is not there, court alone is functioning. When I go for an appeal, based on my appeal, the demand of tax has come down. The order says there is a demand of 1,85,000. I have gone for an appeal. Say out of 5 matters, 3 matters were given as a relief to me. 2 matters were confirmed by a court. This demand of 1,85,000 has come down to 1 lakh. When the demand has come down to 1 lakh, corresponding interest and penalty will also get qualified or will modified to substantially come down. And wherever this particular tax demanded has been vacated, the interest and penalty automatically gets vacated to that particular extent. Again, this is as per the general principles of section 75. Now, important aspect. Where proper officer forgot to recover interest. Show cause notice was given only talking about tax. Officer forgot interest, forgot penalty. Even if the officer has forgot interest, interest is something, a mechanical provision by virtue of legal recovery, penalty interest has to be paid. Whether or not it was mentioned in an order, a show cause notice, order can impose interest because it is a mechanical provision. Now, if the order is not passed under 7310 or 7410 within the time which is to be passed, it is deemed that the order has, the adjudication has taken place and the officer does not have a right to pass any order beyond the time limit which has been set forth. That is the reason every 3 years, wherever the demand has to be passed, they send across a show cause notice to ensure that the order has passed within the timely manner. Moving further. Now, it can so happen that wherever there is a tax matter where appellate authority or a tribunal or a court, when I say court, it is a high court, they have given a decision, and this decision is prejudicial, that means biased, which is against the interest of revenue. If it is against the interest of revenue and this particular matter could be relied upon in any other proceedings where they have gone for an appeal to a tribunal, high court or Supreme Court against the decision of this authority or tribunal or high court, then this provision says that the time limit for appellate authority to hear the matter of the tribunal to hear the matter of appellate authority, or high court to hear the matter settled by tribunal, or Supreme Court to hear the matter which is decided by high court. Now in this case, what happened? Any of the matters which are heard by appellate authority, tribunal or high court, these are against revenue. So what revenue can do? They can go for an appeal. Now, a matter which is decided by appellate authority, revenue go for an appeal at tribunal. If the matter is decided by tribunal, revenue go for appeal to high court. If the matter is decided by high court, the revenue can go to Supreme Court. Like example, in Mohit Minerals case, Gujarat High Court gave a favorable stay in the case of a registered person. The Department of CBIC, the Department of Revenue, CBIC, has gone for an appeal to Supreme Court. So in these cases, what this section 75 says, the period spent before appellate tribunal or high court or Supreme Court, this particular period has to be excluded for fixing the time limit of 73, fixing the time limit of 74. So what happens here? The proper officer, superintendent or assistant commissioner, will write to the concerned assessee saying that, look, this particular matter is pending at Honorable Supreme Court. We would like to not to decide this matter. I issue a show cause notice. I'll not pass an order under 74 for the reason this is pending at Supreme Court. By stating that reason, they can exclude the time limit spent between appellate authority to tribunal or tribunal to high court or high court to Supreme Court. All this particular time limit they will set aside before passing an order under 7310 or 7410. Now, so what if there's a tax to be paid which is called as a self-assessed tax? There's a tax which is shown in a return which was not paid fully. The same shall be recovered under the provisions of 79. In general, as of today, it doesn't happen. Reason, my GST 3B does not get filed unless I pay the taxes. Now, section 75 says that a penalty cannot be levied twice for the same offense. An offense committed once is committed once and he cannot be penalized twice. I'll just give an example. Say there's an e-way bill provision. The goods are moving from Maharashtra to Karnataka. In midway, when it is moving from Maharashtra to Karnataka, say it crosses Maharashtra border, it enters to the borders of Andhra Pradesh, and again from there it gets into the borders of, say, Karnataka. There is a provision to carry e-way bill. The concerned person has updated the e-way bill wrongly. In the e-way bill, the invoice number, instead of updating as 134, is updated as 238. So because there is a mismatch, the officer in the state of Andhra Pradesh levied a penalty. Now he paid penalty and he moved further to the state of Karnataka. When he is entering to the state of Karnataka, the proper officer in the Karnataka cannot again impose for the same offense. Once an offense was imposed in a particular place under the provisions of 73-74, read with section 75, there cannot be a fines penalty applied. Next, tax collected but not paid to the government. Section 76. Let me see if there are any questions so far. Namita is asking this question. If the assessee is not agreeing to show cause notice, if the assessee doesn't agree to show cause notice, he will give a response to the show cause notice. On the basis of a response given to the show cause notice, the officer, the concerned adjudicating authority, let me come to Excel file to make you understand this provision. Now, show cause notice has been issued by a superintendent. Now, register person, what he will do? He will give a written representation to this superintendent. Superintendent, now once this reply is given, basically, this show cause notice cannot be decided by the same officer. It goes to the next officer for adjudication, but at AC or DC. Now, this AC or DC will examine the SCN and reply by the registered person, and then decide to drop SCN or to confirm SCN. Now, this is what happens where a show cause notice was given by a superintendent. I, as a registered person, respond back to the superintendent. This matter will go for adjudication before a AC or DC. And this person, once he decides and he says that superintendent was grossly erroneous, he will drop that show cause notice. If he feels that superintendent is correct, the legal position is correct, and the registered person, what he has explained, is not up to the satisfaction, through adjudication, he passes something called OIO, order in original. This happens. So a show cause notice will be passed by superintendent, order will be passed by a AC or DC. So what happens in case the cadre AC or DC issues a show cause notice, then adjudication will be done by a JC or additional commissioner. Now please keep in mind, adjudication will not be done by the same officer. Adjudication will be done by an officer one step above this particular cadre. And this particular officer will decide the matter and take a call whether to go with the show cause notice or to set aside the show cause notice. Right? We are at 8 o'clock. Let us have a break for 5 minutes. 8:05, we will resume back. Hope you are able to see my screen and I'm audible, ma. There's one question from Namita. Namita is asking that if tax is deposited after order, then penalty is 50%. Earlier, Shoka's notice, it is 25%. So 50% is greater than 25%, which is in Shoka's notice. Namita, see, slightly a point is correct, slightly it is incorrect, ma. I draw your attention to page number 19.14 of Institute material. I'll draw your attention this way. Mechanism, or I will say even 73, 74. See, whenever a Shoka's notice is issued, now, if you look at your page number 19.14, tax amount along with interest paid before issuance of a notice, that is 73.5 or 74.5 through DRC 3. Through DRC 03 to DRC 03 penalty. Okay, I'll mention here penalty under merge. No. Penalty under 73 is 0. Penalty under 74 is 15%. Right? Next. Tax amount along with the interest paid within 30 days of issuance of a Shoka's notice. So I have received a Shoka's notice, and whatever amount which was demanded. Now, generally demand of penalty, it will be 10% or 10,000 in case of 73. 100% of tax in case of a 74. So when officer is issuing a Shoka's notice, he will keep in his mind that penalty can be demanded to the extent of 10% or 10,000. In case of a 74, the demand will be to the extent of 100%. Now, when a Shoka's notice was given, I pay within 30 days of Shoka's notice. My penalty is 0 under section 73. In case of a 74, my penalty happens to be 25%. By virtue of a Shoka's notice, I haven't paid. You are given an option to pay through DRC 03, where instead of 25%, you have to pay only 15%. But you didn't exercise that choice. So I will recover 25%. What if Shoka's notice was given? I gave a response to Shoka's notice, and officer didn't agree with your contention. He has passed an order where I pay tax along with interest within 30 days of order. I repeat, tax along with interest was paid within 30 days of communication of order. Then my penalty will be 10% of tax or 10,000, whichever is higher. Now, in case of penalty under 74, it will be 50%. What happens here? This 100% of the tax gets reduced to the extent of 50% of the tax. So what if I decide, but 30 days have gone, after 30 days, tax with interest paid after 30 days of order. Now, in case of my demand under section 73 happens to be the same, that is 10,000 or 10% of tax amount, whichever is higher. But in case of your 74 notice, my penalty gets restored back to 100% of tax. This is how you need to understand various events connected with your 73. Hope this is clear, Namita. Next. See, quantification of order. See, Namita, keep in mind, there is a question from Namita. Sir, in Shoka's notice, interest was not discussed. Order was alone discussed. Now you are saying that by virtue of your section 75, interest is a right to revenue. Now, if Shoka's notice is 0, how can an order be passed with interest? The answer for that question, Namita, when you read the principles of section 75, what they say, tax, interest, penalty. I'll come to this to make you understand. Okay. Particulars, SCN, order. Tax with interest with penalty. Quantified all together 1,25,000. 1,25,000. My order cannot enhance even a rupee. This demand of SCN. Whatever was there in your Shoka's notice, Namita, the same thing has to be upheld in your order copy. What if, by passing this particular Shoka's notice, the officer concerned has forgotten to quantify interest? In the Shoka's notice, 1,15,000 was quantified for a moment, or 1,10,000 was quantified. In this particular case, my order can be for rupees 1,10,000 less applicable interest. Reason, interest is a mechanical provision. Interest is a mechanical provision. If at all it was missed out in the Shoka's notice, by virtue of the mechanical provision, because there is a loss to the concerned revenue, interest can be applicable. This is what they talked about, section 75. Further, if the Shoka's notice is issued within 3 months before the completion of 3 years, please understand this time limit. 3 years before the due date, order should be passed. Before the order, at least 3 months clear time should be there for a Shoka's notice. If I don't, if I issue the Shoka's notice at the position of an order, it is time barred and notice has no validity. So that is how you need to understand. Coming back to the provisions connected with 76. Tax collected but not paid to the government. One of the draconian provision under GST law. This provision teaches the discipline to the taxpayer. You cannot lavishly do your business at the cost of public money. But at the same time, there are certain other sides of the business which is not recognized, the practical issues in this provision. I'll explain this provision and we will come across the practical issues concerned with this. This provision says that notwithstanding anything contrary to any order, appellate authority, order issued by appellate authority, tribunal or a court or any other law for time being in force, every person who has collected from any other person, any amount representing as tax. Now, the moment you have collected something as tax and is not paid that amount to the government, this money which was collected as tax was not paid to the government, that person shall forthwith pay the said amount to the government, irrespective of whether the supply is subjected to tax or not. They say The moment you have collected something as tax, whether or not there is an exemption notification in relation to that particular supply, you have to pay that particular amount to the government as tax. And that money which is not so paid, any amount required to be paid, but not so paid, the proper officer may serve the person who is liable to pay that amount a notice requiring to show cause why the said amount as in the notice should not be paid by him to the government, and a penalty equivalent to the amount specified in the notice, equivalent to the tax. So any person who has collected percent of the tax amount. So if I have collected 1 lakh as tax and I have not paid to the government, the day the officer has issued this notice, if this tax was not paid, the officer can issue notice under section 76 to demand the 1 lakh tax along with the penalty equivalent to 1 lakh. Now, this term who has collected tax has not defined whether actual money to be collected or invoice raised but not received. There could be government contracts where I raised bill on the government. Now, in most of the government contracts, it so happens that it takes 6 months to 1 year to get the bills processed. Now, this term money collected was not defined whether actually collected by the assessee or invoice raised and it is yet to be received from into the bank account. Now, this is one technical hiccup which we have to look at. As of now, the way the law stands, the money which has been collected by the assessee and it was not deposited to the government, that money will be recovered with a penalty equivalent to the tax amount. Now, as expected, PH, whenever you have to recover that money, you give you listen to the assessee. Let him give reasons why what he has to believe why this money has not to be paid. And once you listen to him and you determine what is the amount which is due from that particular person, and on the basis of that particular information, you recover with interest, you also recover the penalty. Moving on further. Now, so what is the time limit for this? From the day a show cause notice has been issued, within 1 year, he has to pass an order to recover that money. Unless an order is there, recovery provisions will not get triggered. Now, whenever this particular person has gone in for an appeal, the time limit for that appeal before a high court or appeal or a tribunal should be set aside. Now, when this particular person has gone for an appeal and that demand of 1 lakh, say, gets reduced to 80,000, to that extent of 80,000, he has to recover and balance 20,000, he has to refund back. While giving a refund back, the provisions of unjust enrichment will be examined. Should I put it back to customer welfare, consumer welfare fund, or should it be refunded back to the concerned registered person? That will be examined and the amount will be refunded back. Next, provisions concerned with section 77. This provisions concerned with section 77, we had a length discussion when we discussed with refund provisions. This provision says that a person who has paid a tax, which is called central tax or state tax, as the case may be central tax or union territory, on a transaction which is considered as an intrastate supply, later this has been held to be a interstate supply, he shall be refunded the amount of taxes so paid. So what they say, this person who has paid wrongly CGST, SGST instead of IGST, he will get back a refund of that particular amount, which has been considered as an intrastate supply instead of interstate supply. And this particular person is not required to pay any interest for that particular IGST because he has already paid some amount which is called as a CGST, SGST. And whatever amount he has paid as CGST, SGST, he can claim a refund of that particular amount. Next, recovery provisions under GST law, section 78. Section 78, recovery provisions. Any amount which is payable. Now, I'll explain the importance of this provision, then we will see how to apply this provision. See, whenever a notice is given by the department concerned, it is important to respond back. If we don't respond back to the show cause notice, then whatever demand was there in that particular notice gets converted as an order. And keep in mind, students, once an order has been passed, choice number one, you agree for the demand, pay that particular amount. If you don't agree for that particular amount, you go for an appeal. So there is a time limit called 3 months to go for an appeal. If you don't go for an appeal, by virtue of this recovery mechanism, whatever money is due will be recovered under section 79. So what this provision says, any amount which is payable by a taxable person. When I say amount payable, this indicates tax, interest, or penalty. Any amount which is due from a taxable person in pursuance of an order passed under this Act shall be paid. The term shall is mandatory by such person within a period of 3 months from the date of service of order, failing which recovery proceedings will be initiated. Recovery proceedings under section 79. Section 79 recovery proceedings are very, very serious in nature. What happens? Without your knowledge, money from bank account can be recovered, or without your knowledge, money can be recovered from your customers by the concerned government officer concerned. The provisions under section 79 are very, very serious in nature. For that reason, we should understand that whenever a show cause notice has been passed, we have to respond back to that show cause notice before it gets converted an order. And if there is an order, it is due for you to go for an appeal. Now, whenever I file an appeal, the recovery proceedings under section 78 will be halted. Provided that where a proper officer considers it is in the interest of the revenue, for reasons to be recorded in writing, the said taxable person may be requested to pay that money less than 3 months. So wherever the officer feels that I should not give 3 months time, he's running away a person, or this person, the possibility that he may change his shop, business may be changed. It is tough to catch hold of that particular business person. So the time limit of 3 months can be reduced further. This is what 78 says. Whenever I file an appeal, a copy of this appeal will be produced to the officer concerned, saying that, my dear officer, look, I have gone for an appeal at tribunal or a high court or a Supreme Court. Because the learned tribunal or high court or Supreme Court or even this appellate authority have admitted my appeal, you don't initiate this recovery mechanism. Intimation, communication to the concerned person has to be made in case of section 78 recovery proceedings. So what if this concerned recovery, that is appeal, has not been filed? How does the tax officer recovers that money? Then this officer comes for a recovery invoking the provisions of section 79. Now, where an amount which is due to be paid by a person to the government and which is not paid, then the proper officer shall proceed to recover that amount by one or more of the following modes. Now, I'll leave it to your thought before we go further to imagine how this recovery can happen. If the person is having a bank account, recover from the bank account. So what if he doesn't have a bank account? There is a property, movable property. Can I sell that movable property? Answer is yes. So what if there is a immobile property? Recover from immobile property. So there is no mobile property, there is no immobile property. Look at a customer. Is there a money due from customer? Recover from that particular customer. Now, where all there is a mechanism to recover, you can recover. Go one step further. So this particular registered person, he has got zero immovable property in the state of, say, Haryana. However, this particular person has got another registration in the state of Tamil Nadu. In Tamil Nadu, he has got an immobile property. He has got a mobile property. Let this officer of Haryana write a letter to that officer of Tamil Nadu to make a recovery of those particular money. So what if this registered person is registered in Haryana, Tamil Nadu, Kerala, Andhra Pradesh? In these 4 locations, he doesn't have any mobile property. He doesn't have any immovable property. But he has got another place in the state of Telangana where he has got an immobile property. But there is no registration taken in Telangana. What I can do? I can write to the revenue officer. I can write to the municipal officer to put it for an auction to make good of taxes due in this particular state's concern. Imagine what happened in UB case, in the breweries, where Vijay Mallya has taken some loans from PNB and he has gone away from India. Where all there is a mechanism to recover, all those provisions were well thought of and embedded into this provision called Section 79, recovery. So this provision says that, look, first you quantify the amount which is indicated in your order. This money which is not paid, that money will be recovered in this fashion. What they say, the proper officer may deduct or may require any other specified officer to deduct the amount so payable from the money owing to such person, or which may be under the control of proper officer of such other specified officer. Example, this particular registered person, there is a tax which was due to be paid but not paid. This particular registered person filed a refund application. State officer passed an order for recovery of money. The refund application has come to the central GST officer. State GST officer has conducted an assessment. He passed an order for recovery. 3 months gone, nothing happened. Within 3 months, he hasn't paid. So this state officer who doesn't have a jurisdiction for refund application, this state officer may require this central GST officer, my dear central GST officer, look, there is a money to be recovered, kindly appropriate and then release that money. Example, yesterday we were talking about this refund mechanism where under section 54, when a refund application has come for scrutiny, this particular registered person has defaulted GSTR 1, GSTR 3B, so continuously for a period of 6 months. In that particular scenario, this officer, that is one state GST or UT GST, can communicate to the central GST officer. For what? For doing an appropriation. So this is between central GST to state GST. This is my first mechanism of recovery. Moving further. This specified officer means central government, state government, union territory, or local authority, board of corporation, or a company owned or controlled wholly or partially by a central government, state government, or union territory or a local authority. Any of these officers can be called as a special officer, specified officer. Point number B. This proper officer may recover or may require the other specified officer to recover that amount by detaining or selling goods. You detain and sell any of the goods belonging to such person, which are under the control of the proper officer. So what they say, first you see if there is a refund due, from the refund you appropriate. No sir, there is no refund due. What can I do? There is something called mobile property. You sell that mobile property under auction and make good of the taxes due. This is the next mode which they can think of. So that's goods are under a proper officer of another state, which is a distinct person. So that particular proper officer shall prepare an inventory, estimate the market value, and proceed to sell only to so much of the goods for which tax amount has to be made good, and requiring amount payable along with the administrative expenditure incurred on the recovery. Now, whenever they put for an auction, they put an advertisement in a newspaper, they get quotations, expression of interest, they call for an auction, then they make it available. All this administrative cost also will be recovered along with the tax due. And this amount which is under recovery, where the defaulter pays the amount under recovery, including the expenses for this recovery, before issuance of a notice for auction. At times, it may so happen that this particular businessman feels guilty of misconduct. He doesn't want to get his name publicized where there was an auction. So generally, whenever you see this public notice for auction, they will say, so-and-so registered person, son of so-and-so. So-and-so registered person having a private limited company held by director, so-and-so director, who is son of so-and-so. So these people doesn't want to get their name into public. So they may decide to make the payment of this money before it goes for a public auction. So if it is decided, then the proper officer will drop and make good of his taxes. Next is your garnishing proceedings. So, garnishing proceedings, it's a technical term. The proper officer may, by a notice in writing, require any other person from whom money is due or become due to such person. Money is due or become due. That means to say, there is a customer. The customer makes the payment of supply to this customer, this registered person. The government identifies the list of customers. The notice will be given to the customers of that particular registered person, saying that, look, you have to pay so-and-so money to this particular registered person. You don't pay to that, rather pay back to me. Or who holds or may subsequently hold money on account of such person, banker. Whenever money comes into the bank account, at a particular point in time, money is saved, or in future, money comes into the bank account. The notice will be given to the bank saying that attach the money of this particular registered person and pay it back to the government whenever you are due for paying that money to this particular person concerned. This mechanism is called as garnishing proceedings. That means you write a note in writing, you communicate to the customer, or you communicate to a banker to hold that money and pay it back to the government. Now, so what if, as per the trade norms, the customer should pay within 60 days money to the seller? The moment a garnishing proceedings comes into picture, your trade agreement gets set aside. 60 days fund is not there. At notice, whatever money is due, you have to pay back to the government. Notice is issued to the post office or a banking company or an insurance company. And wherever there's a default, who instead of making the payment to the government, they pay to the particular person, then that particular money will be recovered from the respective persons concerned. Now, so what if there is a movable or immovable property registered in this particular person? Then the proper officer may distrain, hold this movable or immovable property. He takes into his custody, and till that money is not paid, he holds that. Subsequently, over a period of time, he will take an auction and he disposes of that particular money to make good of the tax proceedings. As I said, example, this registered person is registered in Tamil Nadu, Kerala, Haryana, Maharashtra. In 4 locations, he doesn't have a movable property. 5th location called Telangana, which is a head office, there is a immovable property. So this money which is due will be deemed to be a arrears of land revenue, they will write a letter to the collector of that district to make good of that particular tax due, which is in arrears. So this concerned collector will dispose of that particular property and deposits that money to the tax authorities concerned. Now, invocation of CPC provisions. In case of your CPC provision, see, generally what happens that a person who owns an immovable property, he may go to court of law saying that, my lord, see, this particular property has been sold for 30 lakhs, but actually it is worth for 50 lakhs. They sold it for much lesser than what actually to be disposed of. There, the provisions of CPC will be invoked, where with the this particular person will be put forth before magistrate on oath. He will be examined. Before the magistrate, they will take into cognizance that this particular property which is due owned by this particular person is being liquidated as arrears of land of revenue, and they will go with the specified mechanisms of the recovery process where they put a public notice. Whoever participates in the public notice, there's a tender price, and that tender price will be taken into consideration on the basis of the surveyor. The government surveyor does a basic survey, indicates that this is a base price. On the basis of the base price indicated, they will put it for public auction. Whoever bids for that, and the highest bidder will be given an opportunity to buy that particular property. Further, so what if I don't go to the extreme of this liquidation of movable property, immovable property? This particular gentleman has executed a letter of undertaking, has executed a bank guarantee. The proper officer can invoke the bank guarantee wherever it has been produced for any of the assessment proceedings concerned. Now, money which is due between the state and central government, this will be distributed between them in the ratio of taxes which needs to be paid. And important aspect, visiting person. As I say, it is mandated that if a money is due in a particular state, this can be communicated to the other officer in any other state, and on the basis of such intimation, the other officer is duty bound to act upon to make good of the tax of arrears which is due as if in that state is as if the due in this particular respective state concerned. Next, payment of taxes in installment. Before that, let me see if there are any questions so far. This is a question from Namita. So what if the registered person has wrongly collected tax on sale of alcohol? Should he need to pay that money to the government under section 76(1)? I'll explain this example this way. Sir, there is a hotel. This hotel has got a contract from a company. What does the contract say? There is an annual Founders Day celebration. There are 300 employees in this company. On account of this annual Founders Day, this 300 employees have to be accommodated in this hotel for the party, where they have to provide some accommodation along with that food. This hotel fellow says that, sir, I have a license to serve liquor. My package is 1,000 rupees per person, where I serve liquor for 500 rupees. I serve food for 500 rupees. As you are all aware, this 500 rupees, which is shown separately in the bill as liquor cost. Liquor is not subject to GST. What if the hotel fellow has collected GST at the rate of 14%, 14%, 28%? The question comes from Namita is, this hotel fellow has collected 18% GST. some reason he hasn't paid the tax to the government beyond the stipulated period of 30 days, within the due date. On the day a notice was served, this hotel fellow says that, sir, I'll pay the tax on that 500 rupees. This tax, which is due on 500 rupees, erroneously, I have collected as GST on liquor. The question comes here is 76 set aside that particular assumption, though it is exempt, though it is non-taxable. The moment you have collected, the point here is you have said that though the particular supply is exempt, you have collected GST. When I go to the definition of 2 clause 47 exempt, my exempt supply includes non-GST supply. By virtue of that definition, Namita, since 500 rupees on that 18% GST was collected, even that money will be collected by the proper officer. So even it is a non-taxable supply, my definition of exempt supply includes non-GST supply. By virtue of that, any money collected on this alcoholic liquor has to be paid back to the government. This is the answer to your question. Next question. If A, whose GST number is cancelled, if he still collects GST, will that tax to be deposited to the government? Any money which is collected as a tax, not to be collected as tax, will be called as a taxable person. Because he made a supply without a registration, he will be held to be a taxable person, and that will be liable for recovery under Section 76. So answer is yes. Further, there is one more question. If a debtor, Mr. X, is also in India, will the officer recover money from that particular person? Answer is yes. Wherever money is due to be recovered, a notice will be sent to that particular person. From that particular person, money can be made good. Invocation of your ED provisions, FEMA provisions will be taken into consideration. Sir, will an officer recover money from income tax refund application filed by SSA? Definitely. See, any state officer, central officer, money which is due from income tax authorities, a letter will be sent to the income tax department saying that, please don't remit this money to this particular SSA. Kindly put it back to the state GST or central GST concern. It can be made because they also have been notified as a proper officer. I appreciate your thought process, Namita. Further, if Mr. S needs to pay to Mr. Y, which he has paid to government under Section 79, will S be eligible of input tax credit? Definitely yes. It is deemed that the tax along with the supply value has been paid to the supplier. At the instruction of 79, the moment this customer makes the payment to the government, it is deemed to be a compliance under Section 16. Sairam has this question. What is the treatment by a company going to merger or liquidation? Your CPC provisions will be invoked. Your CPC provisions will be invoked where this particular money, whichever is due, will be made settlement, and then they will take into consideration. Just give me a minute. Yeah. Whenever there is a liquidation or merger, your tax dues which are concerned, they will first take into appropriation of those particular money matters. And if you recollect, one of the mandates for this merger or liquidation, they give an undertaking to the government, to the GST authority, saying that post-merger, any dues which are held for this company will be paid by the merged company or demerged company. All those declarations they will give, and then they go ahead for liquidation process. Sorry, merger or amalgamation process. Moving on further. Section 80, payment of tax in installment. Now, this is a mechanism where a business person who has been suffering with the working capital issues, he can think of invoking this Section 80 where the registered person can file an application to the commissioner in writing, where he will say, my dear commissioner, these are the taxes which I have to pay. I don't have sufficient money to pay. Kindly give me a time limit for making payment of these taxes. Reason, if the officer invokes Section 76, I have to pay penalty equivalent to the tax. I may not have that much profit. I can afford at best interest, but not penalty. So this case, the section 80 says that other than the money which is assessed in your return as a self-assessed money, other than the money which is due as per return, any other taxes, any other amount you have to pay, you can file an application to the commissioner concerned. I'll give an example. Point number 1. Supply made to a person not disclosed in returns. Supply made with the availment of input tax credit, non-compliance with section 16. Section 16. That means to say, I'm just giving examples for you to understand. No? I have made a supply, but I have not disclosed that information to the government in the returns. This supply is there in my books of accounts. Government contracts are a classic example. Sir, I don't know that money will be received within a span of 3 months, 6 months. I don't know. I have to wait and watch to get that money, and then only I can make the payment of tax to the government authorities. I have input tax credit, but to pay the differential output tax, I don't have working capital. Many civil contractors, they had this serious issues. Like one classic example, any person who's doing a government contract, assuming for a minute, there's elections, there's a change of government from one party to another party. All the contracts which are in pipeline, the payments will be stuck for years together. It's a big Herculean task. Now, those cases, this particular contractor voluntarily can go to the commissioner concerned and say, my dear commissioner, this is a practical issue. I have money due from the government. I don't have money to pay. Please give me a installment permission to make the payment of taxes. Alternatively, I have got a business transaction. I have availed input tax credit. I have to make the payment of tax along with the supply value to my supplier. Some reason there was a disturbance. Customer has not paid the money to me. I in turn have not paid to my subcontractor. It's a tri-party transaction. A gave a contract to B. B gave a subcontract to C. C got some issue with A. A said C has not done the work properly. I'll hold the money of B. B in turn holds the money of C. Now, he knows that B has taken ITC from C. Now, beyond 6 months, if B doesn't pay, he has to pay back that with interest. Now, those are the rules where I can think of my section 80. So, under section 80, a registered person can write a letter in writing to seek for extension for paying in installments. So, this commissioner can give a permission to pay in installments which cannot exceed 24 months. And this commissioner says, look, I'll give you a period which may extend up to 24 months, provided you pay that money with interest under section 50. Now, in the process of giving these installments, even if one installment is missed, the commissioner has a right to call back this payment under installment and invoke the regular provisions under 73, 74 or 76. Next, transfer of property to be in void. Any property which is held by a registered person shall be held to be null and void, where the registered person gets to know that he has to pay taxes. And this particular person, he mortgages this property with someone else for money, or he sells this property for the purpose of making money and running away from payment of taxes. So in all these cases where a person who's due for a payment of taxes, who has known that he has to pay these taxes, who has parted with this particular property. Why this happens? With the intention of fraud, with the intention of getting away from payment of taxes. In all these cases, Section 81 will be invoked, and they say to this buyer, look, you have purchased this property. It is null and void because at the time when he's selling this property, there was a tax which is determined and ascertained and which was not to be paid but not paid by this particular person. Now, this probably can be a valid transaction where the owner of this particular business, he doesn't know that there is a scrutiny of returns, there is a show cause notice which is happening. The show cause notice has not attained the stage of order. It has not attained finality. Or this business person knows whatever tax he has to pay, he doesn't have enough money. He has to sell this immovable property. He sold this immovable property for the purpose of getting the sale proceeds to pay the tax due thereupon. Or with the prior approval of the proper officer concerned, he says, my dear officer, I don't have enough money. I will sell this immovable property and make the payment of these taxes concerned. In all these circumstances, sale of property cannot be called as null and void. In all the tax matters, invoking the provisions of CPC, whenever there is a tax due, it will be first charged on the immovable property. So for the buyer concerned, it is always advised whenever a property is being purchased, which has been registered in the business person's name, means in the case in the private limited company or a partnership firm or LLP, you have to get a clearance from all the concerned authorities before you take over that particular property. In case of say sale of a business as a going concern, where Akshay asked a question, all the risk and rewards on that particular business also gets passed on to that particular transferee. This is what we need to understand. To protect the interest of interest, there can be a provisional attachment. Now, this particular provisional attachment, there was a recent judgment in the case of Gujarat High Court. There are various decisions in India so far. The landmark judgments have come from Gujarat High Court. One of such judgment is in relation to Section 83. Section 83 deals with your provisional attachment, means it is not final. The adjudication process is going on. The officer concerned has a knowledge, has a reason to believe that this particular person is a tax evader. This particular person is an offender. In those cases, provisional attachment. Provision means the duty has not been confirmed. The tax due has not been confirmed. The commissioner, who is the proper officer who's taking care of these proceedings under Section 62, 63, 64, or 67, 73, 74. Any of these proceedings which are in process, where the commissioner is of opinion that to protect the interest of this revenue which is due to the government, and it is important that he has to protect the interest of revenue, he will give an order in writing to attach the provision, the property of this particular registered person, which also includes a bank account. Sir, in the process of doing a bank account, can you attach a CC account? Can you attach a OD account? Can you attach a term loan? Answer to that question, a overdraft account, a cash credit account cannot be attached. A current account, a savings account can be attached. The recent Gujarat High Court judgment, there was a cash credit account. What is a cash credit account? There's an overdraft limit. I receive money from my customer, gets deposited into this account. I have to make a payment to my suppliers over and above the balance which is available in my bank account. I make the payment to the suppliers. So this particular CC, that is cash credit account or a overdraft account, is not possible for the purpose of attachment. Reason, when cash credit or overdraft account is there, this is a money which is due to a banker. Government does not have a right. Government does not have a right to attach that particular CC or overdraft account. This is a decision which has come from a recent Gujarat High Court judgment. So in case of this provisional attachment, the officer concerned can attach a property. So most of the cases you would see in front of a building, there will be a notice mentioned saying that this particular building is attached for the to protect the interest of revenue. You would have seen this SARFASI notices, SARFASA. Under your Banking Regulation Act, the banker will attach a notice to the immovable property, which is called as a SARFASI attachment. Similar to that particular provision, under 83, a notice can be attached, or a stock which is in the possession of a registered person may be attached for the purpose of your provisions of Section 83. Every such attachment, once you attach, why you have attached, there is a assessment procedure which is happening. Did the officer landed up into a conclusion? No, officer has not landed. He is in the process of determining the tax due. So what the law says, look, I'll give you 1 year. Within a period of 1 year, from the day you have attached, you conclude and you pass an order. If you don't pass an order from the date of attachment, this attachment of Section 83 gets vacated. So I'll give these examples where we discussed on Section 132, where there is a cognizable offense in invoice trading, bill trading. A sells to B, B sells to C, C sells to D. So in this process, if the officer notes that A and B are the parties of this bill trading activity, the attachment of immovable property can be made for those particular persons concerned. Moving on further, recovery of certain proceedings, recovery and attachment. Before this, let me see quickly if there are any questions so far. There's one question from Namita. So what if land of Mr. F compulsory acquired by government, will money due to Mr. F can be recovered by the officer under Section 79? If land of Mr. F compulsorily acquired by government, will money due to Mr. F can it be recovered? See, Namita, whenever there is say land was sold for 50 lakhs. The government dues is to the tune of 40 lakhs. 40 lakhs will be appropriated, balance 10 lakhs will be refunded back to the this gentleman F concerned, right? Moving on further, certain continuation and validation under Section 84, where this demand, notice of demand in respect of a tax, penalty, etc. is determined. This money is called as a government due. And once this government due has been confirmed and this particular registered person has gone for an appeal, see what happens whenever a show cause notice is given, it gets converted as an order. Once this money has been confirmed, which is called as a government due, and this gentleman has gone for an appeal, has gone for a revision, and in the process of this particular appeal or revision mechanism, this particular money has been reduced or this particular money has been enhanced. Now, there could be a possibility that when there was an appeal filed, this particular appeal has a mechanism to increase or decrease. Whenever there is a decrease of government due, a fresh notice has to be given for recovering that money. Where if the money has been reduced to the extent of that reduction, it gets nullified, it gets reduced, the commissioner will serve a notice to the concerned jurisdiction officer saying that, look, whatever government dues are there, that has been reduced by an order passed by a court or a tribunal, and to the balance amount, he has to pay the balance amount, which is called continuation of validation. That means when we discussed this Section 76 or recovery under Section 79, wherever this mechanism has been initiated, just because the person has gone for an appeal, this mechanism, recovery mechanism, will not be made null and void. To the extent the matter has been settled, will be relaxed. The balance process, that is recovery under this Section 79, will be put forth, and whatever money is due, that will be recovered under this Section 84. Now, as I say, whatever monies are due, whatever money has been relaxed, that will be reduced and balance amount will be made good by invoking provisions of Section 79. With this, we come to the end of today's discussion. Let me quickly see if there are any doubts so far. There's a last one question. So what if the property of Mr. H on which a bank has a charge, will that property be used for bank loan or for recovery under Section 79? Now, priority of government use, the first right is on the bank. First, it will be made good to the bank. Balance, it will be made good to the revenue concern. And still, if there is a balance amount, it will be paid back to the concerned taxpayer. Students, with this, we will end today's discussion. We will have our next session in the coming month. Till then, stay safe. Good night. Goodbye.